Hey guys, today's Veterans Day and I want to send a huge shout out to all my veterans out there. I served in the Navy as a CB for 7 years, so making content for you is very important to me. And today I made a special video for you about the VA home loan. In this video, I am going to share why zero down doesn't mean that you can purchase a home without having any money saved, and share 4 things that you can do to reduce upfront costs for the VA home loan.
It's not a game, it's a rich thing.
This is the second part of my 3-part series for the VA home loan. I will leave a link to the first part in the description below, and be sure to check out the playlist for the series at the end of this video. Give me a thumbs up on this video and let's get started. One advantage of the VA home loan is that the loan is guaranteed with no money down. The loan limit that is guaranteed varies based on where you live and the amount changes annually. In Seattle, you may qualify for a VA home loan for as much as $741,000 with no money down because of the high cost of living here. One thing you should know is that although you would not have to make a down payment, there are other costs that are associated with the loan. In fact, Navy Federal Credit Union estimates that the amount you would need is about 3 to 6% to close on a house. That means for every $100,000 that you borrow, you will need to be prepared to pay at least $3,000 to $6,000 out of pocket to close. I know you may be wondering what are included in these costs. Here are the costs that may be due at different stages of the loan process. First is pre-approval. A pre-approval letter is required to make an offer for a home. This letter lets the seller know how much money that you approved for and what down payment may be required to secure the purchase. During the pre-approval process, your credit is pulled. There may be some costs that are associated with this. For example, some lenders charge a fee for the credit check when applying for the pre-approval. Federal charged me $19.95 to get my credit pulled, and I believe that the VA limits this amount to around $50. Next, if there are any deficiencies in your credit report, you may need to pay down on some debt to repair your credit. Some lenders, like Veterans United, offer credit repair services to help you improve your credit. Once you put in an offer for a house, you are expected to pay earnest money. Earnest money is the amount of money that you need to put down to let the seller know that you are interested in the property. It is different from the down payment of a loan, which is due upon closing. I read somewhere that this money is used to deter buyers from putting in multiple offers for different properties at a time. The amount you pay is up to you, but here in Seattle, the recommendation is 2% to 5% of the mortgage because of how competitive the market is. This money may be refunded if the loan falls through, but it is usually applied towards closing costs or down payments that you are required to make. Once your offer is accepted, there are a couple of expenses before closing. The VA loan requires an inspection of the property. So for each inspection, there are different costs associated with them. Another requirement is an appraisal to be done. You cannot shop around for this fee, and I believe this amount is set by the VA. Both the inspection and the appraisal could run you a few $100s each. After the inspection and the appraisal, there are other fees and costs that are due at closing. For example, the loan origination fee. This is a one-time fee that is charged to fund the loan, also called a funding fee. It is 1% of the loan amount, but if you have a service-connected disability of 10% or more, you would not have to pay this fee. There are other ways to qualify for this fee to be waived, so please do your research. Another cost you may occur at closing is a down payment. If your loan amount is over the loan guarantee limit, but you only have to pay a down payment on the excess. Be sure to check out a VA jumbo loan if your property costs more than the limit for the 0% down payment. So the VA will not loan you money that is more than the appraised value for the home. This may very well reduce the amount on your loan. You may terminate the contract with the seller if you do not want to pay more than the appraised amount, but if you choose to proceed with the purchase, you would be required to make the excess payment on closing. Of course, you may negotiate with the seller to bring down the purchase price of the home. In some cases, you may want to prepay some of the interest that you would owe to receive a lower interest rate. This may be referred to as buying down your interest rates with buy down points. You may receive a reduction of 0.25% on your interest rate if you pay a fee of 1% 100% of the loan amount to the lender at closing. Be sure to check with the lender for this, since the availability of this option and the limit you can prepay vary. Another cost that may be prepaid at the time of closing are insurance and taxes for the property. Although you would not be required to make your first mortgage payment until the second month after you close on your property, some insurance and taxes are prorated and are due at closing. I am sure you see how much these costs can add up. Now, here are 4 things that you can do to reduce some of these costs with respect to closing on a home. Please do your own research, as I am not a financial advisor or a loan specialist. The first thing that you can do is, when making your offer, ask the seller for credits up to 4% of the value of the home to cover the fees or other costs. The VA Home Loan Guidelines recommend that you do this. I've heard that you can negotiate things like fees for breaking rental agreements in order to move into your new home. The seller may or may not agree to these credits, but please don't be shy to ask. The second thing that you can do is take advantage of incentives provided by the lender. For example, use their real estate agents to get a percentage of the loan as a credit. Both Navy Federal Credit Union and Veterans United give you some money to help you with closing costs if you choose their recommended real estate agents. Additionally, some companies like Redfin give you cash for choosing their service as well. See how you can save with options like these. The third thing that you can do is shop for things that you can choose, like property insurance, title and escrows, and inspectors. Every little bit counts. Now, the fourth thing that you can do is shop around for lenders. Different lenders have different costs for a VA loan. For example, Navy Federal Credit Union does not charge any loan origination fee for their VA loans. They only charge third-party fees, whereas a company like Evergreen Loans has additional fees. When shopping for lenders, try to negotiate interest rates and fees based on what the other lenders offer you. I received pre-approval letters from 3 lenders: Veterans United, Navy Federal Credit Union, and Evergreen Loans. If I decide to purchase a home, I will review the costs associated to close with each lender to see how best I can negotiate to save the most amount of money. If you are thinking of purchasing a home within the next few months or years, you can start preparing for your purchase by checking your credit and getting a pre-approval letter today. The pre-approval process can give you an indication of how much mortgage you qualify for, any corrections you can make to your credit to get better rates, and how much money you may need to save to meet the closing costs, as well as other fees associated with the loans. I hope that you enjoyed this content that I shared with you today. If you are veterans, I want to wish you a happy Veterans Day and thank you for your service. If you are a veteran, please say hi in the comments below and let me know what branch that you serve. Thanks for watching, and be sure to check the other videos in the series here if you haven't already. Bye!